What is up guys, my name is Ignas, welcome back to the channel. Alethea Young from Cantor Fitzgerald went on CNBC to discuss opportunities in a few pharmaceutical names. Let's hear Alethea's stance.
Gilead, over the years, has been an HIV company predominantly, and they had remdesivir, but actually they've been investing heavily in their portfolio, and they're starting to yield the benefits of that over the next 12 months. They have some major readouts in hematology and oncology over the next 3 to 6 months, realistically. And I think if those readouts, which we are positive on, read out positively, I think the stock will re-rate and people refocus on Gilead as more than an HIV company.
So they are heavily investing in their portfolio, and profits there should be starting to materialize in the next 12 months. So I've picked 2 more names, and for today's pharma comparison we have Amgen, ticker symbol AMGN, GlaxoSmithKline, GSK, and Gilead, ticker GILD. In order to make the comparison possible, we will be looking into 8 different factors. Last 4 quarterly earnings results, annual revenue growth, analysts' price targets, forward price to earnings ratio, price to sales ratio, return on equity, current ratio, and dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end the stock with the most points will be considered the winner of this comparison. I understand that not everyone has the full 10 minutes to go through the whole analysis, so I will just bring the results up front for you to look into. So after looking into the fundamentals of each company and assigning a point for the best value in each part, these are here our results. So Amgen got 1 point, GlaxoSmithKline 4 and Gilead 2. This means that with 4 points, GlaxoSmithKline is considered the winner of this comparison. If you're interested to know how we got here, then continue on with the analysis. So the first factor are the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end the stock with the highest sum gets a point for this factor. So these are quarterly earnings for Amgen, and Q3 of 2020 beat expectations, Q4 beat, Q1 of 2021 missed expectations, and Q2 beat. So with 3 beats and 1 miss in quarterly earnings, we get a sum of 3. Quarterly earnings for GSK, and Q3 of 2020 beat expectations, Q4 missed, Q1 of 2021 beat expectations, and Q2 beat. So with 3 beats and 1 miss in quarterly earnings, we again get a sum of 3. Quarterly earnings for Gilead, and Q3 of 2020 beat expectations, Q4 beat, Q1 of 2021 missed expectations, and Q2 beat. So with 3 beats and 1 miss in quarterly earnings, we again get a sum of 3. Results for the last 4 quarterly earnings factor are in the table, and with equal sums of 3, no company is assigned a point for it. Second factor is the annual revenue growth. As potential investors, we want to find that the revenues of a company are on a steady increase. We will take a look into the revenues of the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end the stock with the highest sum gets a point for this factor. So these are annual revenues for Amgen, and going into 2018 there was an increase to $23.75 billion US, then into 2019 we had a decrease to $23.36 billion, and going into 2020 there was an increase to $25.42 billion. So with 2 increases and 1 decrease in annual revenues, we get a sum of 2. Annual revenues for GlaxoSmithKline, and going into 2018 there was an increase to £30.82 billion, then into 2019 we had an increase to $33.75 billion, and into 2020 there was another increase to £34.1 billion. So with 3 increases in annual revenues, we get a sum of 3. Annual revenues for Gilead, and going into 2018 there was a decrease to $22.13 billion US, then into 2019 we had an increase to $22.45 billion, and into 2020 there was another increase to $24.69 billion. So with 1 decrease and 2 increases in annual revenues, we get a sum of 2. Results for the annual revenue growth factor are in the table, and with a sum of 3, GlaxoSmithKline gets the first point. Third factor are the analysts' price targets. Here we will take a look how far the current share price is away from the average analyst price target. If the current price is under the average, we will consider the stock as undervalued, and in the end the company with share prices furthest away from the average analyst target to the lower side gets a point for this factor. So for Amgen we have 22 price targets of analysts. They range from the lows of $185 to the highs of $298 per share. The average is at $248.18 and the current share price is at $208.54. This means that there is 19% of room for the current price to reach the average target of analysts. For GlaxoSmithKline we have 3 price targets of analysts. They range from the lows of $40 to the highs of $52 per share. The average is at $47.88 and the current share price is at $38.52. So there is around 24.3% of room for the current price to reach the average target of analysts. For Gilead, we have 21 price target of analysts. They range from the lows of $63 to the highs of $100 per share. The average is at $75.99 and the current share price is at $68.41. So there is still around 11.2% room for the current price to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with most room for growth, GSK gets another point. Next factor is the forward price-to-earnings ratio. This is the standard price-to-earnings calculation with the difference that earnings here are predicted by analysts. So the stock with the lowest forward price-to-earnings ratio gets a point for this factor. For Amgen, the forward price-to-earnings is at 11.65. Forward price-to-earnings for GlaxoSmithKline is at 12.39, and Gilead has a forward price-to-earnings at 10.15. Forward price-to-earnings ratios are in the table, and with the lowest value, Gilead gets the first point. Factor number 5 is the price-to-sales ratio. It is calculated by taking the company's market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and a high result in sales. So in the end, the stock with the lowest price-to-sales ratio gets a point for this factor. Amgen has a price-to-sales at 4.65. Price-to-sales for GSK is at 2.95. And Gilead has a price-to-sales at 3.22. Price-to-sales ratios are in the table, and with the lowest value, GlaxoSmithKline gets another point. Next factor is return on equity. The percentage here shows how well the company is managed and if money from investors are handled efficiently. So in the end, the stock with the highest return on equity percentage gets a point for this factor. Amgen has a return on equity at 60.79%. Return on equity for GlaxoSmithKline is at 24.29%. And Gilead has a return on equity at 27.14%. Return on equity percentages are in the table, and with the highest value, Amgen gets the first point. Factor number 7 is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As potential investors who want to find that the company is able to cover its debts with assets, but also that they're actually being leveraged. So in the end, the stock with the highest current ratio under 3 gets a point for this factor. Amgen has the current ratio at 1.41. Current ratio for GlaxoSmithKline is at 0.82. And Gilead has the current ratio at 1.36. Current ratios are in the table, and with the highest value under 3, Gilead gets another point. The last factor is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. Dividends may suggest that the company is sharing profits with shareholders, and that is a great passive income source that we as investors are looking for. So in the end, the stock with the highest dividend yield percentage gets a point for this factor. Amgen is paying an annual dividend of $7.04 per share, which is a yield of 3.37%. Dividends for GlaxoSmithKline is at $2.21 per share, and that is a yield of 5.71%. And Gilead is paying an annual dividend of $2.84 per share, and that is a yield of 4.17%. Dividend yields are in the table, and with the highest percentage, GlaxoSmithKline gets one more point. So that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. If you are looking for the results, you need to go back as we already covered those just before the analysis. So are you buying any of the names mentioned today? Share your best picks in a comment below. If you're interested to know exactly when I buy or sell any stock, then consider memberships. By becoming a member, you will get access to Discord, where I share my stock watchlist and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week we did a stock comparison on other 3 large pharma names, and there is also an update for our technical analysis and eToro trading portfolio. If you are interested in any of these, then click on a video currently on the screen. And that was it from my side, thank you for watching and I will be seeing you all in the next one.